the best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. The metals market is currently navigating a period of heightened volatility. Rising interest rates, persistent inflation, and global geopolitical tensions are influencing both precious metals like gold and silver, as well as industrial metals such as copper, platinum, and palladium. Supply chain disruptions and policy shifts are adding further complexity, creating both risks and opportunities for investors. So what does this mean for market participants? Which metals are likely to outperform, and how should investors balance risk and opportunity in their portfolios? How can retail and private investors strategically position themselves in this evolving environment? Well, to find out more, joining me now is Alexandra Symeonidi, who is the corporate credit analyst on William Blair's emerging markets debt team. Alexandra, welcome back to the show.
Hi, Hongbin.
Thank you so much for joining us, Alexandra. Well, Alexandra, the metals market is experiencing volatility due to rising interest rates, inflation concerns, and geopolitical tensions, including recent tariffs and supply chain disruptions. So how would you summarize the current state of the metals market for investors? What are the key factors driving prices across precious as well as industrial metals?
Yeah, Hongbin, I would say that our discussion couldn't be more timely, given the moves we have seen this week in precious metals. Just to highlight a few, gold crossed the 3,500 mark and reached all-time high levels again.
Right.
Silver surpassed the $40 per ounce mark, trading at the highest level since 2011. Copper has been trending up after the tariff headlines, and PGM prices are also up with platinum at multi-year highs. So let's break it down. In precious metals, there are a few catalysts. The market more broadly is experiencing and expecting a Fed rate cut in September. And, cuts are usually supportive for precious prices. Dollar weakness is also quite supportive, and the dollar has remained under pressure so far, given worries over the fiscal in the U.S. and Fed independence concerns. Now, in industrial metals, the picture is more mixed, with copper rallying on the back of strong demand for energy transition applications and thin supply growth. We have also seen tariffs announced in copper in the U.S., which shifted metal to the U.S. basically and created scarcity elsewhere. Other industrial metals, including aluminum, zinc, nickel, have been trading more modestly than copper. This is reflecting macro uncertainty and their individual supply picture.
And as you mentioned, gold prices, it hit a record high, as well as silver. Looks like silver prices broke out of fluctuation range to hit new all-time highs as well. Is this a continued bullish trend or somewhat of a looming crisis here?
Yeah, so in gold, we saw strong investor demand again in August. ETF flows jumped. We also saw an increase in bar and coin demand in Q2. So that's definitely a driver. Central bank purchases have been weaker in the first half of this year on a year-over-year basis, but still very high on a historical basis. Regarding silver, we've seen a big increase in solar panel installations in the first half of this year in China, and investor flows have also been very strong as well here. So I think both metals should continue to be supported because there's still question marks about the U.S. and global growth, as we said before, and inflation. Fed independence concerns have also increased given the removal of a Fed governor by the president. And while gold's reaction to this particular piece of news was more muted in the beginning, I think these broader concerns should remain a catalyst for precious metals prices, especially for gold, I would say.
So with question marks still remaining here, how should investors then position themselves in gold and silver?
So last time we talked about strong correlation with gold and the dollar. That correlation has weakened in the recent months. However, further dollar weakness is broadly expected in the markets, and this is supportive for gold prices. Now, Fed rate cuts are expected this year, with the first probably coming later this month. And historically, Fed rate cuts have been a catalyst for both silver and gold, with most upside coming after 1 or 2 months after the cut. So I would say that, both silver and gold should be supported from here, especially because of the interest rate outlook and the US dollar outlook, which have been historically very supported for these two precious metals.
So, mean, other than precious metals, let's talk about copper as well. I mean, copper has experienced significant swings, surging over 25% recently before correcting sharply with oversupply and trade issues weighing on prices. So what are the current challenges in the copper market, Alexandra, and which factors should investors monitor in the coming months?
Yeah, we've seen big swings in COMEX copper in particularly. This is copper traded out of the U.S., and that reflects the tariff announcements. We've had a 50% copper tariff announcement in July, which shot up copper prices, but in August, on the implementation date, there was another announcement that would exclude refined copper from the tariff bill. Now, this caused a collapse in COMEX copper prices, because essentially the tariffs would be applied to semi-finished and copper-intensive products instead. In LME, we didn't experience this much volatility, but prices have been trending up since the beginning of this year. I would say for copper more broadly, we see very high inventories in the U.S. Market participants strive to ship the metal before the tariffs took effect, and this could create headwinds if this metal is re-exported, and this is if COMEX prices start to reflect a discount versus other markets. Now, a macro slowdown is also a bearish signal for all base metals, the medium term, so including copper. But for the long term, we've seen, and I believe we will continue to see strong demand for copper for the energy transition and AI data centers, which is a piece of demand that has been increasing lately.
And could recent policy shifts or infrastructure spending programs impact copper demand significantly as well?
Absolutely. Infrastructure spending has a big fiscal multiplier, and copper has a high beta on GDP growth. Adding to this, a lot of infrastructure spending projects nowadays have high copper intensity, like, for example, grid updates, EV charging stations. So absolutely, infrastructure could boost copper demand and increase prices, like the announcement we saw of the megatam in China, which led to gains in many metals that day.
Definitely. Well, platinum and palladium, they're also largely driven by industrial and automotive demand as well, with platinum facing resistant levels and palladium showing modest gains. What is the current driving of these performance of platinum and palladium, and how do you see their outlook over the next few months?
We've definitely seen a strong rally, especially in platinum. Platinum has been the best performing metal year to date. This is among precious and base metals, so incredible performance, around 50% gains year to date. This is the result of tight supply, investor flows, and some jewelry demand shifting from gold to platinum. Palladium has seen more modest gains. Platinum and palladium are part of the Section 232 investigation in the U.S., so then we might see tariffs soon for these two metals, which might result in higher prices in the U.S. And I think this is a factor that the market discounts at the moment. I believe platinum will continue to see high deficits due to supply concerns, which is supportive for prices. In palladium, the picture is a little bit different, but we are seeing some U.S. producers pushing for anti-dumping sanctions against Russian palladium imports, and this can be a catalyst for palladium.
Well, then how are technological shifts in the automotive sector, like EV adoption, influencing these metals?
Yeah, Hongbin, this is an excellent question. I would say that EV adoption poses an existential threat to palladium, as 80% of palladium is used in auto catalysts. EV adoption outside China has been slower than previously thought, and that has been positive news for the metal, but that will continue to be a risk, in my opinion.
And with market volatility and global uncertainty here, investors need to, balance risk, diversification, and opportunity across metals. So looking ahead, Alexandra, what are the key risks and opportunities investors should be prepared for in the metals market over the next year?
Yeah, sure. So I think at the moment, precious metals have more bullish signals like growth, inflation risks, Fed independence concern, as we talked about. But over the medium to long term, I would say that copper has a better potential given its uses in EVs, renewables, data centers, grids, and more importantly, current copper pricing doesn't reflect this potential. While with gold and silver, we've seen an extraordinary performance so far. And then it's dollar weakness, which is a positive catalyst for both precious and base metals. I think coming up, I would watch the headlines regarding the tariffs for critical minerals in the U.S. And I think more broadly, protectionism might increase regarding these metals. I think these metals are becoming important everywhere, so we might see changes in regulations elsewhere.
All right, some great insights from you there. Thank you so much, Alexandra, for your time and your insights today.
Thank you so much, Hongbin.
Thank you. That was Alexandra Symeonidi, who is the corporate credit analyst on William Blair's emerging markets debt team. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.